For more on this, we're now joined by author, economic analyst and international lawyer Nick Skrekas, live from Athens. Good to see you today. As I was saying earlier, Greece is due to receive its first batch of the second bailout. We're talking 35.5 billion euros. Many are saying the money is coming in like water would come into a bucket with a hole in it. How long can this money last?
Well, Rory, the plan is that it should last us until about the end of 2014. And out of this particular lump that we are getting this month, 25 billion of it is going to go to recapitalize banks, which we hope will have a positive effect on the economy so they can start lending, credit can flow, and so economic activity can improve, and hopefully so can growth and employment. 5 billion is to pay off a loan that we had, which is in the form of a bond. It was worth 15 billion, but after the haircut, we only need to pay 5 billion, which helps significantly. And of course, there is another 5 billion in interest loans that we have to pay as well.
But certainly Greece can't expect to rely on bailout money forever. How does the country plan to actually generate growth and finally get back on track?
Well, Rory, it's actually very interesting that in the last IMF report that you just mentioned a bit earlier, they finally actually recognized that there is a high balance of risk, which is nice and redeeming after 2 years of ignoring it. And they also said something quite uncharacteristic and quite controversial, that they wanted a slower adjustment, and it was actually the European Union that was pushing for faster and harder austerity measures. Now, the first thing Greece needs to do is to appreciate the fact that while you reduce your debt by 105 billion through the haircut, you're not going to get out of this until you actually implement some of the structural reforms that you've promised to do. And that can be kind of hard. There is a high political cost. And even when that is taken out of account, there is a public service that doesn't want to actually do the things that we pass in terms of bills in the Parliament. We also have to look at things like privatization, but it can't go too fast because asset prices have collapsed. And of course, underneath it all, we have to forget this austerity policy of tax everything and cut wages and slash pensions, because it's a dead end. What we have to do instead to create a primary surplus is to actually reduce waste and get rid of corruption.
Now, I was speaking to a guest just earlier last hour, and the guest who was from Athens was saying that, given the austerity measures that you just mentioned, with lower pensions and lower salaries, suicide rates in Greece are now 10 times above the norm. Now, if I may, just one moment here, I've got this report that's very intriguing. Greek officials are meeting with investors from Turkey to showcase a sale of state-run assets. For example, Greece possibly selling out ports, gas companies, even airports, and relying on its regional rival Turkey. Is this, some might assume, this is a new low for Greece? What are the reasons, do you think?
I think that other than traditional sources of investment in the Western world, through capital markets in places like London and New York, Greece is looking further afield, not just to the BRICS, but even neighbouring rivals. Now, when it comes to Turkey, the two peoples actually don't get on too badly. It's usually the generals and the military banking industrial complex in Ankara that creates more problems between us. When it comes to privatization, I think for smaller assets and assets that are actually non-strategic, not networks of course, there may be something that can be done. And I think, especially in the tourism sector, I don't think anyone may have a tremendous problem with a small marina somewhere that is not in a contentious zone, say in the Ionian, going to Turkish ownership. I think overall, the old expression of you don't want to kill your customers is probably very apt. If we do get some small scale and sensible investment, it may be a good thing.
Well, certainly there might be some who might flare a few tempers when it comes to selling off. I mean, the whole idea of selling off state assets to Turkey might to some seem quite atrocious. But if I may, for well over a year now, we've been seeing these protests and these anti-austerity rallies going through the Greek capital. When we know that more protests are planned today, when it comes to the average person in Greece, how can they further expect to deal with austerity measures? They've been showing their outrage. Is there any?
I couldn't hear the last part of the question, but from what I understand, I think the best way for any Greek to actually express their political will and ask for a change in policy is through the ballot box. And we're actually going to have elections either at the end of April or the start of May. So that may be determinative. I think also there is austerity weariness here, and people are a bit sick and tired of more of the same toxic sort of medicine that got us here in the first place. What they can actually do is lobby for the right kind of change, and that would help us a million.
All right, author, economic analyst and international lawyer Nick Skrekas, live from Athens. Thank you for coming on RT today.